Hello traders, welcome back to analyse FX. To our new subscribers, I would like to officially welcoming you to this great family whereby we learn forex from basic to up to where we are going to be a profitable forex trader. And to our returning subscribers, thank you for your great support. So guys, today we are going to analyze gold. I know I've not. It has been a long time since I analyzed gold, but I want us today, together with you, to analyze gold and see whether we can scoop some dollar from it. And the reason why I don't like analyzing gold is because gold, it has never respect any strategy. It has never respect my way of trading. Are we together? But today, let us give it a try and see whether we can print some dollar from it. So as usual, I'm a swing trader and I love to analyze or see my bigger picture from monthly time frame. So even if you go to monthly time frame, you can see that the market has been forming what? The market has been bullish for the longest time possible. You can see the market has been bullish for the longest time possible. Can you see? Since 1996, 1997, the market has been forming higher lows. Say, up to 2019, 2023, the market keep on doing what? Keep on forming higher low. So all of us, we can see that at this point, you can see this point. At this point, the market was ranging. At this point in the monthly time frame, the market was ranging, and from there, we were expecting if the market will break this range upward and then retest it. We expect it to do what? To rally up. And all of us, we can see the market broke this ranging market for the ranging zone here. Then it never does what? It never retest it, but rather it went ahead and complete the range, that distance. Are we together? How do we trend ranging? How do you trend a consolidation market? There are two ways of trending it. You can either decide to trade within it, or you can decide to wait for the market to break either the side, either the low or the high, and the distance from the high and the low, the market will go that distance, whether it will go down or up. That distance from here to here, the market will go that distance. Are we together? To complete that range, that's how I trade ranging market. So you can see very well. Let me show you what I'm trying to mean. Let us draw this ranging market from here. This is what I'm trying to mean, that the distance from that up to this low, the market will go. If it will break either of the side, the market must go to that up to that distance to complete that range. Are we together? And so the TP1 will be a half of that range. TP1 will be a half of that range. Then TP2 will be the remaining distance. So you can see the market broke. The market broke what? The market broke that distance up, and you can see, all of us, we can see very well, after the market broke it, it went up. Can you see? A half of that distance, we could have taken what? We could have taken the profit up to there. Then we could that will be our TP1. Then TP2 will be what? TP2 will be the remaining distance. And all of us, we can see, after the market has broke, can you see? After the market has broke the TP1, let me show you guys. After the market reached to TP1, can you see there was some resistance here? Can you see there was some struggle here. After the market broke TP1, TP1 is always guarantee. TP1 is always a guarantee. So after the market came and hit TP1, it formed what? It formed some resistance. If you can go to weekly, you can see very well there was some struggle here. Then the market came and complete TP2, and you can see very well after the market complete TP2. That's why the market is doing what? That's why the market is retracing. So it means that the whole of this ranging market, it has the distance from that ranging market. Now it has, we have finished that distance. Are we together? Are you together, guys? So let us go to weekly time frame and see. Let us go to weekly time frame. This was our TP2, TP1, sorry, and all of us, we can see TP2, TP1 is always a guarantee. TP1 is always a guarantee, and you can see very well every time the market come and reach to TP1, it will always form a resistance. It will always have a consolidation or some struggle. It can either come back, retrace back to the entry point and continue to TP2, or it can go, it can continue to TP1. Are we together? And when the market came to TP1, can you see the market had some resistance here also? Why? Because TP1 was complete. This distance was complete. Are we together? That's what I'm trying to mean. So in short, we have completed that ranging market. We have completed that ranging market. So what is the way forward on gold? What is the way forward on gold? So allow me to delete this. Allow me to change these lines to blue now, and see. That's how you trade what? That's how you are going to trade a ranging market. That's how you are going to trade a ranging market. So what is the way forward on gold? What is the way forward on gold? Let us draw something. All of us, we can see there was a trend line here. All of us, we can see there was a trend line here. All of us, we can see the market was forming a trend line there. Can you see? So there was a trend line there. Yes, there was a trend line there. I will draw it very well in daily time frame so that we can all see you can see well. So let us go to daily time frame and see whether we can draw that trend line very well and clearly. So guys, let's come to daily time frame and see whether we can draw that trend line clearly. So I can see here we have a channel. Let me first draw this lower trend line and connect all these lows and connect all those lows. So you can see very well we had a lower trend line there, and by now, right now, I'm hoping that you know what when I say a trend line, you know what I mean when I say also, and also say a channel. Okay, so all of us, we can see we had a channel there, if you can see clearly. So we had a channel there. Are we together? This is a daily time frame. You can see very well. If you don't know how to trade, if you don't know how to draw a trend line, if you cannot use a candle chart pattern to draw a trend line, you can decide to change it to line chart pattern. Then you can draw a trend line very well. Are we together? So all of us, we can see in the daily time frame, the market was in between these two channels. It was in between these two channels. Can you see? The price was the upper channel, the upper trend line acted as a resistance, and the lower trend line acted as a support. And the moment that the price action touched the upper trend line, it means that it acted as a resistance and it put the market downward. Can you see? Then every time the market touched the lower time frame, the lower trend line, it acted as a support and put the market upward. Can you see? So it was in between this channel, and currently you can see very well currently that the market has broke what? The market has broke that the market has break this the lower trend line. And once the market has broke the lower trend, we are treating this lower trend line as a support. So we all know that this is the first sign that the market is changing from bullish to bearish. This is the first sign. It does not tell you to sell. It does not give you a signal to, it is just showing you that is selling. Are we together? It's just showing you that is selling. Are we together? So this is the first sign that we are selling. This is the first sign that we are selling. Let us go back to weekly. I show you something. Let us go back to weekly. I show you something. In the weekly, I told you guys, I promise I will make a video about the hidden candle. I will make a video about the power of a hidden candle. I have not get some time yet to make that video, but I promise I will make it before the end of this month. Are we together? So in the weekly time frame, that is the hidden candle. In the weekly time frame, that is the hidden candle that we don't see it in the monthly time frame or 3-month time frame. We don't see that candle in the monthly time frame or the 3-month time frame, but we are seeing it where? We are seeing it in the weekly time frame. In the weekly time frame, that is the hidden candle. Are you together? And then if you can see very well, in the weekly time frame also, there is a change of character. There is a change of character. Let me show you why I'm saying so. There is a change of character here. Can you see very well? So the price action has break this low. This was the last low before the price rally up. So this was the last low. So the price has, the sellers have done it. So the sellers have broken the sellers have broken that low. Are we together? The sellers have broken that low. So with all the confluences, trading is all about combining your confluences. Are we together? So trading is all about combining your confluences and find the reason why you are entering a buy or a sell. So the first reason we are seeing that we are now going to sell is because we have broken this lower trend line. Can you see? We have broken this lower trend line which acted as a support. The second reason is we have done what? We have broken what? We have broken the current support. We have broken the current support, and all of us know that once the current support is broken, once retested, it acts as what? It acts as a resistance. So allow me to change this support to be red now. Are we together? So we are expecting that support to act as a resistance. So let us go back to daily time frame. So we can all see here whatever we saw in the weekly, the same thing happened. So this was the support which was broken. This was the support which was broken, and we can see it form what? It form a higher high. So this was the support which was broken. So let us adjust that support very well. So it was there. Are we together? So it was there. So what I'm expecting is I'm expecting the price to do what? I'm expecting the price to come retest this support, retest this the current support which was broken, and this trend line. That is my expectation, and then we drop, So I'm expecting something like that, and then we drop up to this zone. I'm expecting something like that. Are we together? I'm expecting something like that. So that is daily. So let us go to 4-hour time frame and see what we can see and try to find another confluence and another reason to sell this market. Are we together? So let us go to 4-hour time frame. So this is how I always analyze my market. Anytime I enter to any market or to any pair, I just use top-down analysis, and I found my buyers, and I found the reason why I'm selling the market. Are we together? I'm selling or buying the market. So if you can see very well is that we can see that in the 4-hour time frame, all of us, we can see, let me try to analyze here. All of us, if we could have entered here, because we could have seen that we had a head and shoulder. The neck was broken here, and it was retested, and the price does what? The price dropped. Are we together? So currently the price is below here. Currently the price is here. This is where the price is. So let us see if you can see something. So I told you there are patterns or the setup I'm looking for. I am looking for to see a double top or a head and shoulder if I'm selling. If I'm selling, I'm looking to see in daily time frame a double top or a head and shoulder. Are we together, guys? So remember, in daily I told you I'm expecting the price will come and retest here and this and this and this trend line. That is my expectation before we do what? Before we drop. So let us analyze 4-hour time frame and see whether we can see something else. So in the 4-hour time frame, I can see my supply zone here. This is what I'm calling a supply zone. If you have not watched my video, the intermediate class, I told you that the supply zone is where we are expecting the prices of sellers to come in. So it is the last bullish candle before the price dropped, before sellers dropped and break the what? And break either the and we had either the BOS or change of character. That is the supply zone. So this was the last candle, the bullish last candle before we had a BOS, and I told you guys they are characteristic. Before we mark this as a supply zone, they are characteristic it has to fulfill for this to be qualified to be a what? To be a supply zone. For one of the characteristic is it must break, we must have a break of structure or change of character. It must cause those two. So and you can see very well it caused what? It caused a break of structure. It caused a break of structure. And number two, it must do what? It must lead to what? It must lead to fair volume gap. And you can see very well there is a fair volume gap here. There is a fair volume gap here, and that's why this one it is qualified to do what? This one is qualified to be our supply zone, 4-hour supply zone. Are we together? 4-hour supply zone. So even daily, you can see even here also there is another supply zone here, and there is another supply zone here. So we have 3 supply zone, 1, 2, 3. Those are the 3 supply zone we have. But now I'm not going to focus here. I'm not going to focus on this one or this one. I'm going to focus on the last supply zone, this one. Are you together? I'm going to focus on that supply zone. Reason being is, since I am bearish, if buyers will have momentum and break this supply zone up, now I'll be focusing on the rest. I'll be focusing on those 2 supply zone. I'll be focusing on these 2 supply zone. I'm not expecting buyers to break this supply zone. I'm not expecting that. If they will do so with a bullish body candle, if they will do so, now we have changed from being bearish to bullish. Are we together? We have changed from being bearish to bullish, and we are now going to target these highs and these highs. Are we together? So that's why I'm not focusing so much about these 2. Now my focus is here. So what is the way forward on gold? Up to there, I hope I'm clear. Up to there, I hope everyone can understand what I'm doing. Are we together? So let us see something. So we have the institutional candles. We have the institutional reference here. All of us knows, if you have been trading ICT, you can all know that. We can all know that this is a supply. This is a supply order block. This is the supply and demand order block. So this is a supply order block. Are we together? And then we have a fair volume gap here. And then we have what? We have a mitigation block here. We have a mitigation candle or block there. Are you together? We have a mitigation candle there, and a mitigation block up to there. Are you together? So, and there is a rule. So today I'm going to show you how I use what? How I use premium and discount. How I use premium and discount to trade or to enter this trade. Are we together? So I will come to my Fibonacci. I will place my Fibonacci from that Fibonacci retracement from that high to this low. This is what now I'm calling a range. So the price is in that range. the price is in that range, the price is in that range. So I'm expecting to enter for sale. It is divisible. There's this, if you are selling this red zone, it is discount. It is not advisable to sell in a discount zone. It is not advisable to sell in a discount zone. It is advisable to sell above a 50% upward. This one is now a premium zone. It is advisable to sell at premium zone and to buy at discount zone. Are you together? And we can all see that the price is at what? The price is at discount zone. The price is at discount zone, even if it has touched our 50%. Are we together? So there is high possibility that the price might continue. The price might continue to do what? There is high possibility that the price may continue to sell from this zone, downward, that one, which is still okay. But I'm not going to enter that trade, because why? It has violated the rule of discount and premium and discount. It has violated that rule. So where are we going to enter? The best place to enter is any institutional reference above 50% if you are selling. Are we together? Any institutional reference above this zone, that's where we are going to enter for sale. So we are going to enter at this mitigation block here, or at this order block here, supply order block. Are we together? We are going to enter there. So the safest place is to enter at this supply zone. Are we together? At this supply zone, the sell order block here. Can you see? We are going to enter. This is the best place to enter, the safest place, or here. We don't enter in the discount. I hope I'm understood. I hope I'm clear. I hope everyone can understand what I'm trying to mean. Are we together? So let me delete this. So I'm expecting to place my entry 1. So my entry 1 will be here at this zone. This will be my entry 1 and my entry 2. The safest place to enter is here. The safest place to enter is here. So if the buyers will come and retrace up to this zone, and then if the price will come up to this zone, and then I see something like this, now we are going to enter for sale. Are we together? Up to the lower, we shall targeting this. I will show you where we are going to target. But right now let us focus on the entry. So if you are going to see a head and shoulder at this zone, or double top at this zone, just know we are selling. If you are going to see something like that, just know we are selling. That is entry 1. Entry 2 is here. The price might come and decide to do what? And decide to sell from this zone. So you shall see something like this. If you shall see something like that, that zone now is safest to sell. But the safest place to sell is at this premium zone here, supply zone here, because now we are going to put our stop loss just above it. Are we together? We are going to put our stop loss just above it. That's why I'm saying it is safer. It is safer to do what? To sell at this zone. Are you together? So this will be our entry 1 and this will be our entry 2. Are you together? So even if the price will decide to sell from this zone, I'm not going to enter from that point, because I know there's a higher possibility it may come and do what? There's a higher possibility this one might be an inducement. There's a possibility that this one might be an inducement. I will be making a video discussing inducement and liquidity, showing you, illustrating to you about the bullish order block and the bearish order block. I made that video theory, so go watch that video before I make it as a practical, because before I illustrate to you. So These are the two areas I'm looking for. I'm looking for sell. Are we together? So let us look for the profit. Where are we going to take our profit? Where are we going to take our profit? Where are we going to take our profit? We are going to take our profit here. Can you see? We are going to target this liquidity here. We are going to target this liquidity here. Can you see? We had what? We had double bottom. We had a double bottom here. We had a double bottom here. So we are going to target. If we see a double bottom here, it means that the buyers bought here from here and they put their stop loss down below here. So we are going to target below. We are going to target below this zone to target as a liquidity. So we are going to do what? We are going to target the stop loss of these buyers. So we are going to target that, and most probability is can you see this candle? The hidden candle, guys. This is the hidden candle. We are going to target this candle. We are going to target this candle. We are going to target this candle. Now this will be our taking profit. This now will be our taking profit. All of us, we are going to target that candle. So that will be our target zone. Let us draw together. That will be our target area or our target zone. So that will be our target area or our target zone. That zone. So we are going to target that area. And I've given you reason why we are targeting that area, because above here we had what? We had a liquidity. Here we had a double, equal double, relative equal double bottom. So down below here we are expecting to have a liquidity. We are expecting to have a liquidity. So our TP will be below this zone. It will be here. Are we together? Around 2460 there. That is our TP. That will be our taking profit. That will be our taking profit. If you have any question, remember to comment down below and I'll be glad to help you. So that will be our taking profit for what? For sell. That will be our taking profit for sell. So let me just extend this. That will be our taking profit for sell. I hope I'm clear. So I've shown you where to enter. I've shown you how to take the profit, our TP. So that is the plan. I'm watching the gold very careful. I'm watching gold very careful, and to see whether we can print dollar together. So I'm watching. Let me repeat. These two areas is the safest place to do what? To enter the market. If the buyers will come and push the market up to here, you can decide to enter as a TP1 and wait for this to be taken as a TP2. Are we together? So I've shown you the setups to look. I've shown you it will make what? It will make a double top or a head and shoulder. Then once we have seen a double top or a head and shoulder, you know how to trade those patterns because I've shown you. So we are going to enter at the once the neck has been broken, we are going to enter up to this zone. Are we together? So let us go to 1 hour time frame. Let us go to 1 hour time frame and I show you something, and I will tell you the reason why I'm seeing that the price might not retrace up to those TP, up to those two entries, up to these two entries. So I will tell you, I'm going to show you why the price may not retrace up to this and two entry up to here. Let me be specific. Why? The reason why the price might not retrace up to here. It might come up to this zone, then we shall sell from this zone. So number one is, in 1 hour time frame, we already seen what? We already seen there is a double top. Can you see? In 1 hour time frame, there is a double top. There is like a letter M. All of us can see. Train yourself to see this pattern. Train yourself to see this setup. Can you see? So in 1 hour time frame, there is something like that. There is something like that, guys. So these two things, these can mean two things. This, first of all, we are going to mark what? We are going to mark our the neck zone. We are going to mark that neck zone, and the neck zone is like a support. We are going to mark that zone with a blue with the blue line. We are going to mark that zone with the blue line. Are we together? And I want you to watch careful. I want you to watch careful. First of all, let me explain. In 1 hour time frame, we have seen there is a change of character. This was the last low which was broken. Can you see? The last low which was broken. So currently in 1 hour time frame, the market is bullish. Currently in 1 hour time frame, the market is bullish. Are we together? Currently in 1 hour time frame, the market is bullish. That I want you to know that. Are we together? So this pattern can mean two things. It can mean that if it will break the neck like that, now we are going to enter for sell downward. That is one scenario. If you are going to break the neck from that zone, we are going to enter for sell. But I can see a possibility. There is high possibility that this zone here, it acts as an inducement. I can see there is a possibility that here there is inducement. Why am I saying inducement? Because there is double top here, and all of us knows that sellers they have entered, early sellers, they have entered this market and placed their stop loss above here. They have placed their stop loss above here. So meaning that the market will come, and this is now an inducement. What is an inducement? An inducement is a pattern that it will do what? It will induce you. It will cause you to enter the market early, so that it will trigger you to enter the market early, so that it will make you a liquid. You will be now a liquidity. Are we together? So this is an inducement. So any sellers who sold the market from this zone, they have put their stop loss above here. They have put their stop loss above here. So the market, I can see a possibility. The market will come up to this zone. The market will come up to this zone. Then we shall sell. We shall sell. I can see that will be a high possibility. It will do like that. So all of us, I will now focus at this zone. I will now focus as this zone. I will now focus as this zone. This will be my entry zone. So I'm expecting, if I shall see something like this, if I shall see something like this, something like that, I shall enter this market. I shall enter this market. TP1 it will be like, TP1 will be here. We shall target this zone. We shall target this blue zone now, the support. Why am I saying so? Because let me show you something. Why am I saying so? You must have a reason of everything you are doing in forex. Are we together? Do not just buy or sell without a reason. Do not just buy or sell without a reason. Let me show you why I'm telling you this is a TP1. You can see we have a relative double bottom here. We have a relative double bottom. Why am I saying so? Because here it is relative. Can you see? It is relative here. So anyone who entered to buy here, they have put their stop losses below here. They have put their stop losses below here. So I'm expecting to come and grab this liquidity up to this zone. Are we together? I'm expecting to come and grab this liquidity up to this zone. So my TP1 will be here. If you are selling, so my TP1 will be here, but my overall TP, it will be here. My overall TP, it will be here. Let me tell you, my overall TP, it will be around 24 here, 2460. That will be my overall TP, my overall TP for gold, my overall TP for gold up to there. Otherwise, have a blessed weekend and have a blessed week ahead, and stay safe. Please, I repeat, use proper risk management in gold. Use proper risk management in gold. Use proper risk management in gold. Gold, it can make you it can make you to become rich, or it can blow your account. Are we together? So gold is very crazy. Number one is the value of the gold, the pip value of the gold, they are very high. It has a high pip value. So it can it can blow your account very fast, or it can make you a millionaire very fast. Are we together? It can blow your account very fast, or it can make you a millionaire very fast. So use proper risk management so that we can print this dollar together and become a profitable trader. Are we together? If you don't know about risk management, go watch my video. I made a video about the risk management in trading. I made a video about the risk management in trading, so go watch that video. Go watch that video, and I'm sure it will help you. You will learn a lot. So to add my confluence is the reason why I'm going to enter for sell at this zone. You can see here we have a what? We have a trend line. We have a trend line in 4-hour time frame. We have a trend line here. Can you see? We have a trend line here. So at this zone, I'm expecting that once the price will come, retest this trend line here. Now we shall enter for sell. Everything in trading, you must have a reason. Don't just place buy or enter or sell without having a reason. So I'm expecting this trend line will be retested here, then we sell. That is my expectation. Are we together? So have a blessed week, have a blessed weekend, and may God bless you. Thank you for watching, and let us grow together. Thank you, guys.